It's not just oil seeing a spike here. Gold hitting its highest level since August of 2020. It is now up more than 9% this year. So is there any more room to run? Let's go off the charts with Chris Verrone of Strategas, a Baird company. Chris, what do you see?
Hey, Mel, yeah, well, I think certainly gold as a hedge here continues to make sense. But if we just put this in some context, as far as the broader market goes, I think the first thing we all have to say is we know we don't know. But if we're going to speak objectively about the price signals that we're seeing every day, I mean, there are really three things I look for at a tradable low. I look for VIX above 40. I look for spikes in put calls. I look for spikes in trend. And we're sitting here with S&P down 13 and Q's down almost 20, and we really can't check any of those boxes yet. Is this correction in equities over with Apple still above the 200-day, right? So I think ultimately the good stuff probably has to get sold here before we're through this. And if you just look at the next slide here, it's triple Qs versus S&P. We talked a lot about in the early COVID days how big events speed up what's already in motion. Well, a lot happens on the other side as well. And triple Qs have been peaking relative S&P for the better part of the last 6 months. And the Russia-Ukraine events have only accelerated that ratio at new lows today. So what do we own, or how do we hedge out this risk? I still think gold is frankly underowned. It acts great. If you look at the gold flows, the flows into GLD over the last 3 months are just nowhere near as aggressive as they were in summer of 2020. So I think there's room for sentiment to get more pronounced here. And then when we take a step back and look at the longer term chart, monthly momentum is fantastic. We're punching above 2,000. I think it circled 2,500 on the gold chart before this is all said and done. But as part of the bigger story, right, are we seeing that indiscriminate capitulative price action that often marks the lows in equities? I think it's early to make that call, Mel.
Chris, GDX is often a levered play to gold when the gold prices go up, but oil and fuel, it's a big input for gold miners, and I'm wondering which is a better chart in your view?
I think the better chart here is the physical. And when you look at a lot of the gold stocks, the individuals, they really have not taken out their summer of 2020 highs yet. Gold is closer to doing that. So I think you want to own the physical here. We also can get just a much better read on sentiment. As we talked about, GLD flows, so flows into the gold ETF, are just not as aggressive as one might expect. Now, there's been some inflows the last 4 or 5 days there, not surprisingly. But when you look at this over a longer time period, I think there's room to go before that gets crowded. It's not here.
And then last quick question, Chris, I just want to underscore this notion that the good stuff has to come down too. So Apple, in your view, should go lower.
I just find it hard to believe we take S&P down 15 and Q's down 20 and we don't get Apple below the 200. And on top of that, I would say, don't forget when oil spiked in 08, ultimately, they went after staples and utilities as well. Staples and utilities ultimately got sold before that was all said and done. So don't make the mistake that just because stuff is up here, it's protected. In these corrective phases, there are no sacred stocks. There are no unsellable names.
All right. Good advice. Chris, thank you. Good to see you. Chris Verrone of Strategas. Tim, you've been on the gold trade.
Yeah, I like it. And if also something else just to drop into your horizon is the last time gold really had a spike, and so not the summer of 2020, which is the previous high that we are about to get through or have got through, that the GDX has not. Chris is absolutely right. And I think it's going through it. But is a decade ago when a lot of this stress on Europe, remember what was going on with European sovereign bonds. And so this is very dollar positive in the short run. Ultimately, so very, very positive for gold. And I think diversification by central banks is onward.
I'm with Tim on that. Newmont Mining, when I say multiply here, I think it's like a 40-year high in Newmont Mining today, approaching $80 a share. We haven't seen levels like that, as I mentioned, in decades. I think gold's got a lot of room to the upside, and you're finally seeing for the first time in a long time the decoupling of gold from crypto. It's a conversation we've had a number of times, but it's happening right before our eyes.